So I'm a lawyer and a chartered financial analyst by training, and worked for a big securities company for a number of years, and a number of years ago founded an independent practice. And I like to say that where you sit is a function of exactly how you feel about these issues. Where I sit is as a risk manager whose job is an absolute return firm where we don't want to lose money. So we're not a relative return firm. We don't consider, if we lose less than some kind of a benchmark, we've done some kind of a good job. In our world, we would rather collect a positive return, even if it's a modest positive return, if we can avoid the big drawdowns that happen in world markets. So we're very much historians. We very much a lot of work on cycles over the years. We've looked at 200 years of market history. My partner's a technician. We use a lot of technical analysis over top of macro analysis in terms of overall economic stuff. We're situated out of Canada, but because the Canadian economy is completely dependent upon the American economy, because we've always been sort of the poor cousin to the American economy, we follow the American data, incredibly. And so our perspective is as foreign investors, if you will, in the U.S. markets and in the U.S. currency, because our investors are primarily Canadian-based investors. So I wrote the book Juggling Dynamite, it came out in April of 2007. I started writing it in 2005 because I noticed there were so many crazy behaviors going on in the world, and particularly in the financial world. And it really struck me that the average bear had been sold a bunch of marketing baloney in terms of lifestyle, in terms of spending, in terms of you need to have this, all this aspirational wealth in the Western world. And it was being funded more and more and more on credit. And I just thought that the whole Wall Street selling people risk was detrimental to the sustainability of economic development in the free world, and also just to the peace of people. Like, people had bought into this idea that consumption was, you had to always consume more and shop more and spend more to be happy. And in fact, it clearly isn't the case. And clearly it's now coming to be realization that that's been a self-destructive pattern. So I started writing the book in 2005, finished it in 2007 just as the credit crunch hit, and launched a blog at the same time, jugglingdynamite.com, which has, again, because of the market conditions and the sort of timing of the message, which is sort of fortuitous, I suppose, but the blog has really taken off. So it's become very popular throughout North America, and I even have, European readers. I think the thing that's different, perhaps from my perspective, is that there's been a very big culture of American bashing, if you will, for the last number of years. And I don't say that it's not deserved in some ways, because America really did have, everything, and they've done a lot of abusive, destructive things to themselves over the last number of years. Failure of leadership. Failure of wise policies. Who is to make wise those who are required to have wisdom? It's been like the kids have been having a party and there's been no adults involved. So I think that's all coming now full circle. But the caveat I add to that is, it is not just America that has done those dumb things. It is worldwide phenomenon. I have a lot of extended family in the UK. I was over in Ireland a couple of times recently. The European economies, Australia, it's all premised on what happened after 9/11, 50-year lows in interest rates. That was the number one unifying premise. So it is not an American phenomenon that people have borrowed their brains out. It's just that America is the benchmark currency. And so it's almost like the rest of the world is now trying to blame, because Lord knows no one wants to take responsibility and have critical thought. They just want to follow blindly and hope it all works out. And then, of course, when it doesn't, they're very quick to say, well, it's your fault. You told me. You said this would work. You wizards on Wall Street. You told us that this was smart, and we did this, and now look what's happened. But what they're realizing is that Wall Street never were responsible. They never were fiduciaries. The financial community's responsibility to the population in general is, as Galbraith said, it is not small, it is nil. There is no sense of responsibility. So I think that now we're starting, the average bear, and I'm passionate about trying to teach the average bear on the street some of this stuff, and that's why I wrote the book, and it's why I write the blog. they're starting to realize that. Oh, so I can't just count on, the wizards in the Federal Reserve or in the government or in the, all the marketing machine that has its way with us. And they're starting to see it's back to individual discipline, individual responsibility. And I think it's a good thing, I'm really excited, actually. I was more pessimistic a couple of years ago because all this horrible stuff was happening and no one had yet seemed to notice. It was, in Canada, for example, we brought out, the CMHC is our Fannie and Freddie for sort of equivalent, the Canadian Mortgage and Housing Corporation. So I'm following this trends in the United States in the real estate market for the last number of years and thinking, oh my God, this can't go well. Canada has a meeting with the government, the head of CMHC has a meeting with the government in 2006. And they decide to government insure 40-year amortization, 100% no equity down mortgages. In 2006, the writing was already on the wall. The housing market had already peaked in 2005 in the U.S. The defaults had already started. Implodometer was already counting down. And Canada, like some, ridiculous child, because they felt immune, because they thought that we were selling rocks and trees to the whole world, and America's, obviously they're doing everything wrong, but, we're selling lots of stuff to the emerging markets, so therefore we're much more intelligent. All that crap that just wasn't true. And so what happened was they've been taken unawares. So our politicians are coming on now saying, okay, our Canadian economy is contracting and we're losing jobs, and okay, it's looking, this is serious, and they're surprised. So, what we need to do is be very realistic. I say you don't need to be a pessimist. I'm not this is the doom and gloom, end of the world. But if you can be a realist, you can understand market cycles. It doesn't take a genius to have a look at human behavior throughout history and say, aha, okay, so there's these generational cycles that are secular cycles is what we call them in market history. Generational cycles, and each generation's memory is about exactly as long as their own experience. So, we've discovered the commodities boom in the last few years. A lot of the people in the industry today didn't remember the commodities boom of 66 to 82, right? So this is like the new, aha, it's different this time. Just as the tech boom was, in the late 90s. Most of the people that got caught up in that euphoria didn't remember the tech booms of the 60s and, that went the exact same way, to great excess on this whole hope that the business cycle had been abolished. Business cycle is with us. It's part of our human behavior. We overspend it up into the peak of a cycle. We have to stop spending for a while, pay down debt. The consumer retrenches, consumption drops. It creates the, contraction, recession, bottom, whatever, and then eventually we go back up into the next upcycle. So it's all very normal stuff. But every time we get near the peak of a cycle, whatever's been hot gets sold, with spades, and then people are hurt. And it's sad to watch because real life people, they buy into these, as I call them, secular themes, which can be 20 years in length. I'll give you an example, a secular theme of the baby boomers needing drugs and health care, okay? So in the 90s, the late 90s, as pharmaceutical companies and were doing record profits in the incredible bull market of, stocks and all that, healthcare funds were widely popular. Everyone bought that secular theme. They said, oh, yes, okay, well, this means, this. So for that, they assume they mean straight up forever, no pullbacks, no business cycle. People piled in, and what's happened since then? Pharmaceutical and drug companies have made no returns ever since. We're completely flat. Technology's completely flat. Semiconductors, which do lead the economy in a recovery, are now back below their '02 lows. So they've made no gains at all this business cycle. So those things are a reality. And if you don't plan for cycles, you keep buying in late, holding too long, losing heavily, selling near the bottom, and it's just over and over. And it's very frustrating to watch.